did you? Anything you want.
What could dethrone the dollar as top reserve currency? Central banks seem leery about the Chinese yuan. What will finally pull the rug out from under the dollar's hegemony? The euro? The Chinese yuan? Cryptocurrencies? The Greek drachma? Whatever it will be, and however fervently the death of the dollar folks might wish for it, it is not happening at the moment. According to the most recent data, the IMF just released its report, Currency Composition of Official Foreign Exchange Reserves, COFR, for the fourth quarter 2017. It should be said that the IMF is very economical with what it discloses. The COFR data for the individual countries, the total level of their reserve currencies, and what currencies they hold is strictly confidential. But we get to look at the global allocation by currency. In Q4 2017, total global foreign exchange reserves, including all currencies, rose 6.6% year-over-year, or by $709 billion to $11.42 trillion, right in the range of the past 3 years, from $10.7 trillion in Q4 2016 to $11.8 trillion in Q3 2014. For reporting purposes, the IMF converts all currency balances into dollars. Dollar-denominated assets among foreign exchange reserves rose 14% year-over-year in Q4 to $6.28 trillion, and are up 42% from Q4 2014. There is no indication that global central banks have lost interest in the dollar. On the contrary, over the decades, there have been some efforts to topple the dollar's hegemony as a global reserve currency, which it has maintained since World War II. The creation of the euro was the most successful such effort. Back in the day, the euro was supposed to reach parity with the dollar on the hegemony scale, and it edged up for a while until the euro debt crisis derailed those dreams, and now there's the ballyhoo Chinese yuan. Effective October 1, 2016, the IMF added it to its currency basket, the special drawing rights, SDR. This anointed the yuan as a global reserve currency, but not all central banks disclose to the IMF how their foreign exchange reserves are allocated. In Q4, the allocation of 12.3% of the reserves hadn't been disclosed. These unallocated reserves have been plunging. Back in Q4 2014, they still accounted for 41% of total reserves. They replunging because more central banks report to the IMF their allocation of foreign exchange reserves, and the COFR data is getting more detailed. So among the 87.7% of the allocated reserve currencies in Q4 2017, the pie was split up this way. Disappointingly, for many folks, the Chinese yuan, the thin red sliver in the pie chart above, didn't exactly soar since its inclusion in the SDR basket. Its share ticked up by a minuscule amount to a minuscule share of 1.2% of allocated foreign exchange reserves in Q4. In other words, central banks seem to lack a certain eagerness, if you will, to hold yuan-denominated assets. The Swiss franc, with a share of 0.2%, is the black hair thin line in the pie chart. Note that the Euro's economic area, the Eurozone, has a large trade surplus with the rest of the world, which, along with other factors, disproves the assertion that a country that issues a reserve currency, such as the US, must always have a large trade deficit with the rest of the world. It can go either way. The chart below shows the percent share of various reserve currencies since 2014. The black line with the red dots at the top is the hegemonic US dollar, whose share has edged down a tiny bit. The euro, blue line, is stable at around 20%. The dollar and euro combined accounted for 82.9% of the allocated foreign exchange reserves in Q4 2017. Each of the rest of the currencies was an inconsequential also-ran. As a memo entry and not part of the percentages, I added the descending purple line to show the rapid disappearance of unallocated reserves. The Chinese yuan is the bright red line at the very bottom, just above the Swiss franc. Since 1965, the dollar's share has fluctuated sharply, and the current share of 62.7% remains in the middle of the range. The chart below shows the dollar's share at year-end for each of the past 52 years. The dollar's low point was in 1991, with a share of 46%. Starting in 2001, the euro, which had replaced the Deutsche Mark and the currencies of 4 other Eurozone member states as reserve currencies, now expanded to 19, made a visible dent into the dollar's hegemony, but the financial crisis did not, and the Chinese yuan, on which all recent hopes had rested that it could pull the rug out from under the dollar, well, it is barely above the level of a rounding error. In other words, folks who've been eagerly waiting for the death of the dollar or similar fiascos will have to learn how to be very patient. Not that there isn't enough going on that could raise doubts about the dollar, with trillions flying out the window so fast they make your eyes water. This is why US dollar could be headed much lower, not up. US dollar to drop on the back of higher deficits. Mark my words, the US dollar could be heading much lower before it goes any higher. Just recently, newly appointed White House economic advisor Larry Kudlow said, "A great country needs a strong currency." He added, "I am not saying the dollar has to go up 30%, I am just saying let the rest of the world know that we are going to keep the world's international reserve currencies steady." As bold as this may sound, take these words with a grain of salt. Understand this, for the US dollar to go higher, you need the US government to manage its expenses and the US economy to do well. Without these 2 elements, the dollar can't go really far. Here's the thing. The US government continues to spend without any remorse. It wasn't just the Barack Obama administration. The Trump administration is continuing the legacy. To give you some perspective, in the first 5 months of fiscal year 2018, which began in October 2017, the US government already accumulated a budget deficit of $391.0 billion. Source: Monthly Treasury Statement. U.S. Bureau of the Fiscal Service, last access March 15, 2018. In fiscal year 2018, the U.S. government's budget deficit could be much bigger than in the previous year. Not too long ago, the Trump administration cut the corporate tax rate, which could mean much lower revenue. It can't be stressed enough. Budget deficits are bad for the U.S. dollar. As the result of continuous budget deficits, the U.S. government has accumulated a national debt of over $20.0 trillion. A slowing U.S. economy could send the U.S. dollar tumbling. As for the U.S. economy, it is currently a feel-good economy, more than anything else. Sure, the data on the surface looks great, but if you pay attention to the leading indicators, they say that the U.S. economy may be headed for a downturn. Obviously, this could hurt the U.S. dollar badly. Just look at what businesses are doing. It doesn't look like they are too optimistic about the U.S. economy. You can read all about it here. This one number says recession soon likely for the U.S. economy. Understand this also. The Federal Reserve is currently raising interest rates, which has a direct impact on economic growth. As interest rates go higher, the economic growth rate tends to slow down. The Fed has made it very clear that it wants to raise interest rates further, so this could really drag down the already dismal U.S. growth rate. Outlook for U.S. dollar 2008 lows are possible. Dear reader, you might hear all about how the U.S. dollar could be strong, but don't get lured by the optimism. All the stars are lining up perfectly for a lower U.S. dollar. If you look at the U.S. dollar's performance relative to other major currencies, it is horrible. Now, with higher deficits and a slowing U.S. economy, the greenback could get much weaker. Keeping all this in mind, I will not be shocked if we see the U.S. dollar index, currently standing at 89.00, dropping below 2008 levels below 70.00 sooner rather than later. Remember, a lower U.S. dollar could be great for gold prices.